Well, thank
Welcome
you
to the
for
Future
having us.
Ventures podcast, and thank you for joining us, Kevin and Kurt. I'm super excited to have you. Kevin, why don't we start off with you? Do a short intro as to who is Kevin Salquist?
Well, thank you for having me first off. So Kevin Salquist, I come from the capital markets background, where I spent the past 30 years doing everything from trading to cap intro to sales trading in capital markets area. I was a market maker way back when you actually had market makers. But as things have progressed, now in the private equity world, which I'm very thankful for, and I've been a member with Kurt here at Big Seven for the past 3.5, almost 4 years. And that's my background.
Thank you, Kevin. Kurt, let's turn it over to you. Tell us a little bit about who is Kurt Winter.
Yeah, thanks, Maxim, for having us. I come from I reached a stage in my career. I would call this the maybe the third out of 4 chapters. 30-year experience, executive in manufacturing, very proudly domestic manufacturing, which made me a bit of a unicorn, say back in the roaring offshore days of the 90s and early 2000s. Basic. I mean, I love basic manufacturing, things that businesses to businesses that they need, whether it's a replacement part, a replacement gear, a gasket, or those are wonderful businesses to me because, and we can get into our investment thesis, but that's, those just don't go away. People just don't understand that, for example, a Tesla motor, everyone thinks, Tesla is this modern marvel, but, what goes into the car are very, very basic components. And that's, and that's where we like to insert ourselves into the whole, ecosystem.
Fantastic. And I mean, I suspect that Kurt, this is very much in vogue with the new president. This is definitely a mandate, like bring home manufacturing. Now, easier said than done, and maybe not all manufacturing is suitable to be repatriated back to America, but certainly some, particularly if it's more of a micro manufacturing rather than mass scale. Why don't we turn over and just chat a little bit about Big Seven Ventures? Because what I love about what you guys are doing is it's in some ways it's almost like back to basics, but it's not basics. It's focused on industrial things that all businesses need.
Yeah.
Go ahead.
Do you want me to go ahead?
Yeah, fire away.
Yeah, so we at Big Seven are looking for niche industrial manufacturing companies that are essential to infrastructure and the building of America. Sort of the simplistic view, or if you want to call it dirty jobs, the blue collar stuff we love. Those businesses that we go around looking for, typically we like them to have been around for at least 30 plus years. Founders are most of the time it's first generation, but these people have built these fantastic businesses that have been around, weathered a few economic cycles, and we look to come in, grow these companies, and scale them.
Kurt, anything to add to what Kurt said, to what Kevin said?
No, Kevin summed it up pretty well. We love the sector. It's often overlooked, although I will say, in the private equity space, you'd be amazed at how much dumb money is out there flooding the market, all looking for these same deals. I would say our niche, when we talk to a potential acquisition, and there's always competitors in the room.
Yeah.
But what they like about us is we take a long-term view, and it's not just, hey, we're not going to flip this business in 2 or 3 years. We're gonna run it. We're gonna grow it. We're going to reinvest in it, and then 10 or 15 years from now, we can decide what we want to do with it. And my guess is in 10 years, we'd probably just keep running it. So we love established businesses that are cash flowing, that perhaps haven't taken advantage of some of the technology or the controls out there. So in that we can really boost efficiency and take some waste out and boost margins. So that's really, we come in, we don't want to blow any operation up, but we surgically look at it and just think, well, if we're to 20% gross margin, well, how can we get to 25% gross margin? And we just sort of, since we are operators, that's what we think in terms of margin. And so these businesses are amazed at the potential they had been sitting on, but didn't really, unlock it until you have, some outsiders just asking a lot of questions, dumb and smart.
Understood. Can I just double click a little bit on the investment thesis? I mean, you're talking about the longer term horizon. You're talking about like running and operating the businesses. In the investment thesis, I read about continuity focused investing. So kind of like, how does continuity focused investing differs from traditional private equity?
Well, again, it's all it's what's baked in and what we decided on and what works and what sort of differentiates us from any other private equity group. We don't highly leverage any deal. So these businesses, they're very we'll call them legacy businesses, and they've had years of break even, and they've had years of double-digit explosive growth, and so we know that going in. So our thesis, we're very patient. We never over lever, and then in these sort of long cyclical legacy type industrial businesses, they tend to cycle in 3 years, and that for private equity, that's almost that's a terrible thing for traditional private equity, because they want to dress this thing up in 3 years and sell it. Whereas we'll patiently grow this thing. We like to see 10 or 15 top line growth, year in and year out. And after 5 years, you've almost doubled the business. So that's where we really diverge from. It's our time horizon. It's our, sort of the capital structure, our tolerance for debt, not a lot. So in fact, this one deal we're working on, and I don't mean to get in the weeds, but it's 100% equity. We just don't we're putting zero debt on it. And so, day one, it's going to provide, as we see it, outsized returns for our limited partners. So very conservative.
Makes sense.
Yeah.
I mean, you're already highlighting some of the kind of the principles that you guys adhere to. What are the most common ways in which Big Seven Ventures upon acquisition drives a lot of value accretion, or how do you create values within this company? You talked about some of the digital transformation, but what other ways do you add value?
Well, we've got, we have a playbook, and it works. And so we walk in and soup to nuts. We set up an incentive program for senior management. We love, most senior management, they stay. They know the business, they love the business, and they just happen to be dancing with somebody else besides the founder. So it just starts with everything. It starts with incentive programs, and we like to build a culture. Hey, we're not just some a marauding group of four that are that are going to come in and drain the company of cash. No. We want to help you. We want to help you buy that house or put your kid through college. So it's really a unique cultural fit where we kind of slide in. And then on the quantitative side, it's just, we have these dashboards, and it's funny, every acquisition that we go into, they intuitively know what we're looking at, but they've just never had it explained to them or clearly set on their desk saying, these are the 5 things that we have to have, month in and month out. So it's our playbook. It's just a little discipline, and it's actually just unlocking the team that's probably been under the founder owner for 25 years, and the founder owner, what we've discovered, they usually have a pretty healthy ego, and a lot of times they built great businesses, but they stop listening to the people that are doing the work, and we sort of we sort of flip the pyramid upside down. Yeah, Kevin, does that
Yeah,
sound
no, I
about
think
right?
that's completely accurate. You know, the seller, founder, whatever you want to refer to them as. In our case, they've sort of been on cruise control for the past 10 years or so. And so they've, as Kurt mentioned, has the entrepreneurial spirit that they once had has sort of evaporated, which is understandable with age.
Yeah.
Energy and everything else that they once had to put into the business. And so when we come in, we're re-injecting that energy that originally was there 30 plus years ago or whenever it was founded. And again, Kurt mentioned, you know, we're listening, we're turning the pyramid upside down, listening to people, where can we improve? And, you know, we value everyone's opinion.
Makes sense. Change is hard. How do you navigate through the change, especially because, and Kurt, you highlighted this, that a key component of what you're trying to build, or how do you build the future, is to empower the leadership team that's within the company. So the transition from like the founder being in place and he or she has built the company to where it is today, to now a private equity company coming in and providing its influence or playbook in terms of how to run a company. How do you navigate through this change to make sure that the key man or key woman risk is addressed, and that we keep the people, the highly valuable employees in place?
Yeah, we have a secret weapon, and that's called Kevin Salquist, because he's the nicest, most sincere guy that you're going to want to know. But no, I joke, but you know, we just have honest conversations with them, and you know, and clearly, you know, trust is earned. So you know, day one, nobody trusts us, but you know, give us a couple quarters, and I would say 100% of the time they're incredibly surprised, and then you know, after a year they're ready to break down walls, because you know, it's the little things. We return phone calls. We you know, we know everybody's name. You know, we're sellers, not tellers. You know, now, not to say if someone absolutely can't get on board, then, you know, then usually it's probably the right thing that we part ways. But it's really more of a, you just sort of, you figure out what culture they have, you insert yourself into it, respect the culture. It's obviously been created over, you know, 20, 30 years, you know, and then you just make small changes. You know, you can't, because everyone, you know, Maxim, you said it, change freaks everybody out. But you know, it small changes, you know, incremental, you know, quarter turns, and by you know, by the end of year one, you can do full turns, and they you know, and they're ready to go.
Yeah. Curiosity question, because both of you talked about kind of like this, creating an alignment between you and the leadership team in place, or the organization. How do you go about goal planning or goal setting, or kind of like, how do you create this alignment so that to your point, the team has the incentive, the desire, the ability to smash through walls?
Well, I certainly think, you know, you make it a collaborative effort. And as we've mentioned, we listen to everyone's input, and we show that value, that their opinions and thoughts matter. And then we take that and combine it with what we think should be done along with them. And you get buy-in that way.
You know, I think people are amazed at how much they underestimate, you know, their abilities, or where the business can go. You know, we'll sit and we'll forecast. You know, we'll do a forecasting session. Everybody loves those. But you know, hey, what do you think sales are going to be this year? And three people will say, you know, pick a number, 20 million. And Kevin and I will sit there and go, you know, I think you guys can do 24. And then, you know, then they go through this, oh my God, there's no way. And then, you know, like month 9, month 10, month 11, they're getting really close to 24 million. So people that they're very hesitant to go out on a limb, but if you can pull and coax it out of them, it's amazing what they can do, and don't even know it themselves.
What has been the biggest unlock that you have seen in terms of driving revenue or driving growth, driving scale?
What has been the greatest
unlock? Like what makes the biggest difference?
Yeah. Kevin, you want to?
Well, I mean, the biggest lock is one, you get the buy-in and you get everyone motivated behind one team, one dream, right? I mean, not to be oversimplistic there, but it's empowering those people, as Kurt mentioned before. Oftentimes they sort of underestimate their net worth or their worth within the company. And if you foster that, like, hey, you got this, go, give them a little belief in themselves to go down that road. I think that, unleashes a whole new wave of energy and entrepreneurism where you start firing on all four cylinders, so to speak.
Yeah, and I would add to that, it's just a bunch of questions. Why not? Hey, are we selling to this? Are we selling to this segment? Are we selling to this customer? Oh no, we had a falling out with them 10 years ago, and we can't sell them anything. Mike and Kevin and I will say, well, why not? Has anybody called them? It's just, these are very basic questions, but they're all sort of why not questions. Have we ever tried selling to GE? Oh my God, the approval process to sell to GE is, and they'll give you 25 different reasons why they can't do it. But you get back to them in like 3 weeks and they'll say, yeah, we're approved with GE. We have a meeting with the, with the sourcing manager. So it's a series of, we can kind of survey the terrain. And what happens is we come in and our spotlights, our beams pretty wide. And then if you've been at the same job doing the same thing for the last 15 or 20 years, the beam just gets a little smaller. So we just there's a lot of why not questions.
Yep. Makes sense.
Yeah.
How do you guys go about finding this essential backbone, irreplaceable businesses? Like what's your deal flow analysis, scouting for businesses that fit your investment thesis?
For us, it's a combination of a few things. One, I mean, like everyone else, you have your various brokers out there with the M&A firms that we've forged relationships with, and they know what Big Seven likes. And if we haven't heard from them, we'll sort of reach out to them and say, hey, you got anything interesting out there? Secondly, it's word of mouth. Hey, and I know some guys that, would love these types of businesses. The other one would be, Kurt's great at this. Kurt knew of a couple companies in a certain geographic area. We'll then, if we don't know anyone in that area or within that company, we'll go seek out, hey, who's the president of the Rotary Club or the Chamber of Commerce? And we'll go out and befriend them. And we'll say, hey, Joe Schmo, Kevin and Kurt, we're some really nice guys. Can we take you out to lunch? And then we'll just basically like, hey, there's a couple companies that are probably members of your organization that we would love a warm introduction to. And just have a friendly conversation, nothing pending, but we do it that way. And that's really, I mean, look, Big Seven, we're not going to sit there and we're not going to compete with some giant PE firm. That's just not us. We're looking for that undermarketed, not market deal where someone is looking or thinking about selling. And we're going to go meet them in person and say, this is what we are. We are going to 100% embrace the culture and the environment in which you've created over the course of this company's history. So it's brokers, word of mouth. And then, if we find a company through the various third-party websites where you're kind of scouring for these, niche industries, maybe, using AI or what have you, and you don't know whether they're for sale or not, but it kind of narrows the focus.
Makes sense.
Based on your search.
Yeah, our search is very, we're able to our searches are pretty efficient, but the only way they are, it's just personal relationships. We establish a personal relationship with a owner, founder, seller, or a business broker, or like Kevin said, I mean, that was kind of a funny example, but we saw a couple businesses and we went through the chamber, and the chamber introduced us to the manager introduced us to the owner. So we're pretty persistent, and we get very creative.
Yeah. And where do you guys invest in, and what's the typical acquisition size? Like, is it mostly in California, all over Western United States, all over United States?
Yeah,
I would say we're industry agnostic. We're pretty much geographically agnostic.
Okay.
In all honesty, just because of where we are, the East Coast might be a little tough one. It would have to be of a certain size to justify, travel going back and forth.
Yeah.
But I mean, our typical deal size, let's just say on the top line, it's going to be something between 8 and 9 million to 25, 30. I mean, that's a very large range, but that's sort of our
Deal specific. Yeah.
Mhm.
deal specific. On the bottom line, it's going to be keeping the numbers consistent, maybe 900 to 1 million to 3 million. And as I mentioned before, we want these companies, we like them to have been around for at least 30 plus years. They don't necessarily, every company has its little bump in the road, so to speak.
Yep.
But for the most part, they've been growing and profitable. And they manufacture a part or a product that is essential to America.
Yeah.
I would just, I'd put in, will we look at business? Are there states that are friendlier than others? I mean, come on, we all know. We're looking at we have an acquisition here in California. I mean, I'll be honest with you. I wish we were anywhere else but California. It's a great business. It's it's on very solid footing, but West Coast, Oregon, Washington, California, difficult to do business. I mean, it's just a difficult business environment. Texas, Midwest. I mean, those people speak our language. So yeah, and then the East Coast, like Kevin said, that's we tend to. Those are just hard to have a intimate management relationship with, because you can only Zoom call so many times with your team, and you've got to do a lot of FaceTime. So really center of the country is our sweet spot. But like I said,
the industrial heartland. Yeah.
We've broken that, and we're now just completing a deal here in California, which surprised us, but it's a good business.
No, I mean that makes sense. As like you've talked about some of the investment criteria that you're looking at. What kills a deal, like for you? Like what are red flags that you just cannot move past?
I'll try, Kevin. So what kills deals? If we find a deal and we get say we get past the first date, maybe we're on the second or third date, and then all of a sudden we hear, there's five other firms looking at this company, we're out. It drives the price up. It's great, don't get me wrong, it's great for the seller, but for us, we have to make money on the buy. And we typically in terms of multiple, we haven't paid anything more than say a four multiple. So it's like
4 on revenue, 4 on EBITDA.
EBITDA.
Okay.
Yeah, which is pretty conservative. And we've gotten some deals that are incredible. But like I said, what kills a deal, when all of a sudden the seller, owner, broker, banker, when they throw the door open and say, okay, we're taking bids. We're going to take bids, or write your offer, next Wednesday. And that's, for us, that's we're out. So, and then also, we don't mind a fixer upper, but, again, if it's we sort of evaluate the landscape and think, well, okay, this thing's been run into the ground for the last 4 years. Can we turn this thing around? But again, what kills a deal for us is if a customer, or excuse me, if a company has lost, large customers over the last 3 or 4 years. So if their customer base is shrinking, that's just so hard. That's so hard to turn around. But I would say that primarily, if I had to say one thing, it would be a sort of a bidding type war with a company, and that kills a deal right off the bat. But we haven't had, we've never uncovered, when we go through the financials, we've never uncovered any really strange stuff or fraud or accounting inconsistency. We've never really encountered that. Clearly that would be a red flag, but from our experience, we've never, people want to get it right for the most part. So.
Yeah.
I mean, you guys see a ton of deals. If you don't mind sharing, what's the most overlooked sector or sectors in the moment that people are maybe driving by and not realizing how much value this thing has?
Oh, maybe, Kevin, that could be what we're looking at right now.
Yeah.
It's you're going to laugh. Industrial fasteners. And and this company's been around for almost 50 years, and they're in this little nondescript building. Like you said, you pass by it 100 times and don't know what they do, but we like the industrial fasteners because it touches everything, whether you're building a skyscraper or a car
or a data center.
Yeah. So I would say that's we've had good luck with that one.
We have.
And again, China was the killer. And they drove hundreds, if not thousands, of businesses, out of business. But now with the tariffs and the new onshoring and the new sort of, hey, manufacturing's cool again. We see a really long runway with these companies. But Maxim, it's not like they're not. It's not like AI. It's not AI returns. I mean, these are just solid. Yeah, right.
That is.
You could make it's 15%. If you're an investor and you're making 15% with us, that's pretty damn good. But it's not crypto. It's not AI. It's just it's just what it's going to be. But that is those are oversized returns in our opinion. But it's just, it's not sexy.
And Maxim, we tell our LPs, we're your contra SaaS technology investment.
Yeah.
You invest with us, you're sleeping at night. You're not worried about some technology taking over your business or crashing in the ground.
You're
investing with us because the products in which we're producing are going to be here tomorrow and the day after and going forward. And as Kurt said, you're not going to get the same return as you would possibly, but you're sleeping at night knowing that you're going to get a nice steady return.
I couldn't agree more with you. Recently, we were asked to raise a fund for luxury real estate, and it's the same situation. Is it like, are you going to get 30, 40, 100, 200%? Hell no. Are you going to get 15 to 18% return? That's pretty good. Is it great? Well, low risk, low reward, right? Like lower risk, lower reward. But to your point, you have something tangible, physical to touch, so you can sleep well at night.
Well said.
And a business we started to work recently with is Seals, and I was absolutely dumbfounded as to how much growth they have had over the last few years, in particular with COVID, because everything needs seals. Whether it's industrial equipment, yellow piece of equipment, like Caterpillars of the world, like everything, and that business is just like a rocket.
We identified a gasket and seal company last year.
Yeah, that was the one that got away.
Got away.
But it's to your point, Maxim. It's a great. We love that.
Yeah.
Yep.
Absolutely love that.
Funny you brought that up.
Business.
Yeah.
That still kills us. When you brought that up, it brought back old wounds.
Well, they tried to buy a company in Texas, a manufacturer, and unfortunately, somebody else came in with a lot more money, and it picked up the company. But yeah,
Yeah.
it's a great business.
Yeah, we lost it to a strategic. One of their
Yep.
competitors
Yep.
came in and basically it was almost 2x greater than what we had. And we came in at what we thought it was like a 7. We came in at a 7x.
Yep.
And the competitor's like, hey, we're going to roll you up. And I think they gave them like an 11 or a 12 multiple. And we're like,
Yeah.
no, we can't compete with that, understandably so.
Yeah.
And as you said, like, you make money on the buy.
Right.
Yeah, if you're up at a 10x, man, oh man, you are walking a tightrope.
Yep.
Yeah.
Well, it stretches the horizon that much longer, and like the longer the horizon, the less certainty you have over the outcome.
Yeah.
Correct.
For sure.
Yeah. Do you guys co-invest with other investors, or everything that you do is 100% Big Seven?
We wouldn't be opposed to it.
Okay.
We haven't as of
Mhm.
today.
Mhm.
But look, I mean, if there's an opportunity and it presents an interesting story, if you want to call it that, yeah, we would consider it.
Mhm.
Same thing on the, like, if someone, let's say you had a situation where you have 3 partners and 2 want out, or maybe
Mhm.
one of the 3 wants out. I mean, we would look at that and come in as a junior as a junior
Yep.
owner, but there certainly need to be wording that we get first right of refusal to acquire the
Mhm.
balance of the company down the road.
Mhm. Mhm. Mhm.
Yeah, we just like control, but we'd consider, we consider some, some joint projects.
Yep.
Yeah, it just really hasn't occurred. We have a wonderful stable of limited partners who we've done well for, and they just keep, I shouldn't say they just keep, but they're willing to take another, another trip with us if we find something
Mhm.
interesting. So we really haven't had to, go out and sort of engineer some sort of more complicated partnership. Our recipe is very simple, and it's paid off.
Yeah.
Are you guys, like, how many LPs do you have? Are you running an evergreen fund? When is the next fund? If you're not, kind of like, when are you raising? How much you're raising for the next round?
Our typical raises are, say 5 to 12 million, and I would say on the limited partner, if you maybe put a number, I don't know, 20 that are willing to come with us. But it's deal by deal, so it's not, it's an unfunded, which we like. First off, the reporting and the regulatory is it is totally manageable. But once you start getting into raising money for a fund, reporting requirements become a bit onerous. So we like it that way. And then, it's deal by deal. And if you're in a fund, if a couple pieces of the fund are underperforming dramatically, it drags the whole thing down. And so we like, it's deal by deal. Our LPs understand it. They can touch it. Actually, in fact, a lot of our LPs usually want to take a tour. They want to see the facility that we're that we're going after. So it's very tactile. But again, you limit the risk deal by deal. So far we have done well, deal by deal, and you don't have this sort of blending of returns. We're looking for outsized returns deal by deal, and if if by chance you strike out on a deal and it goes south, it doesn't drag the entire, that's the logic. But that's what
The LPs love the transparency of individual opportunities.
Yeah. And a lot of times these private equity groups, they hide management fees, and it's a pretty it's pretty gray what goes on in these funds. It's it's a black box for a lot of investors.
Yeah. Well, opaqueness versus transparency. It's always better. Even if the fund is perhaps not achieving what LPs are expecting, or if the investments, by having transparency, everything is on the table. Everything
Right.
could be discussed. Yeah, I agree.
And
I
we
agree.
tell our LPs, look, we're going to update you quarterly with financials and how things are going. And we were having this conversation, Kurt and I, with LP yesterday, and we're like, he was saying, well, do you give monthly? And we're like, absolutely not. It's kind of hard to get a good picture on a monthly
Yeah.
updates, but quarterly, absolutely. But hey, you know what? If all of a sudden, you wake up at night and you have some premonition, oh my God, pick up the phone, call us. We're happy
Yeah.
to jump on. We're here for
Yeah.
you. We'll love to talk. It's an
Yeah.
open book. We're not going to hide anything, and we'll share what we have.
Makes
Yeah,
sense.
a lot of times the LPs, with sort of a direct relationship with them. I mean, they'll call us and say, "Hey, have you guys thought about, maybe this is a bolt on to the
Yeah.
business that I'm invested in." So it's it's funny. Some of the feedback it's great, it's valuable. More is better than less. So we haven't actually been able to make an acquisition on a limited partner tip, but you never know.
Keep them coming.
Yeah, exactly.
Yeah. So you guys talked a lot about control. What's your ammo? What's your ammunition in terms of driving operational excellence within the businesses that you acquire?
Again, I think it just comes, the playbook. If you, really, what you're trying to do is, doesn't matter what business is, doesn't matter what you're making. If you can create, I don't know, whatever the head count is, 20, 30, 40, 50 owners that have a direct stake in increasing efficiency, rooting out waste, a lot of peer, peer pressure to do the right thing when nobody's looking. That's what drives it. And so if you create owners, you're never going to get 100% buy-in. If you get 90% buy-in, I think you're doing pretty well. But that's the sort of self-sustaining culture that we like to create. And how do you drive it? They drive it. You just give them, you give them what's in it for them, right? And if you create, if you come up with some creative ways to share the profit, man, they're in. It's at the end of the day, they're not there because they love the work that they're doing. They're there to earn money and take care of their family.
Of course.
And so we're absolutely realistic about that. And they spend more time at the plant than they do at home with their family. But if we can create a dynamic culture environment that they're not just another cog in the wheel, I mean, come on, that makes life it makes it better. And then you like I said, you create a bunch of owners on the shop floor. And so you're not, no one's down there cracking the whip, because they know what to do. And they know if they, if they're underperforming on Tuesday because they had a long night Monday, well, that impacts everybody down the line. And potentially you make less money that day.
Yeah, I agree. I mean, greatness is in the agency of others. And I had a mentor for a couple of years when I was working at big energy companies. And he said, success for you as a leader is defined by how many high fives the teams gives each other when you're not there, right? Like, kind of like what happens when you're not there. I was like, this has stuck with me because it's so visual, right? Like,
yeah, you're right. That's hopefully not a lot. Hopefully not a lot of high fives. Yeah. Yeah.
That's awesome
stuff.
What should people know about you if they want to get in touch with you, if they want to pitch your investment, if they think that they have a company? Is your portfolio publicly available so that people can see, okay, well, I can see there's adjacency here where we can do some kind of value chain integration?
Yeah, you can visit our website, hit either of us on LinkedIn if that's if you so choose. I mean, we're readily available and more than willing to talk to
Yeah.
those that want to hunt us down. So
Yeah.
Yeah.
And I don't, we have our tombstones, don't we?
yes,
On the website. Okay.
Okay.
So
yes, we do.
Okay.
it shows the companies that we're
You've
involved
invested
in.
in.
So
Yeah.
yeah. And so, very, very clearly, you'll look at it and go, oh, okay, I get what these guys are up to. So
Yeah.
Yeah.
Do you want to give a shout out to one? Can you pick your favorite child?
I think we have a new favorite child, don't you, Kevin?
Yeah, I think so. I think we do.
Yeah. Shout out to Conklin and Conklin threaded rod.
Okay.
Made American quality, made in Union City, California, of all places.
Okay.
Yeah,
Okay.
wonderful business, wonderful team. We expect great things from them.
That's amazing.
Yeah.
That's amazing. Anything that they haven't asked you that they should have asked?
Ooh.
Good question. Not that I can think of.
Yeah, no, Maxim.
Okay.
Great talk. You're looking at Kurt and Kevin are, we're chief bottle washer, server and chef, all in
Yep.
one. So we run a small lean operation, and we're very proud of it. What up? Go ahead.
I was just going to ask Kurt and Kevin, what does your technology stack looks like for in terms of evaluating deals, ingesting deals, or kind of like deal flow, evaluating deals, doing the due diligence, monitoring kind of like performance? Like, do you have a system that you use? Like, what does it look like?
It's just it's dashboarding.
Okay.
You're going to laugh, Maxim, but all of our companies are driven off of QuickBooks.
Okay.
We see no value in a big Microsoft Dynamics or whatever they call it now, or
It's still Dynamics.
Salesforce, or
Yeah.
is it still called Dynamics? I don't know.
Yeah.
I had my former corporate life. We had an integration that lasted 3 years. So I think the only people that made money off of that deal were the
Consultants.
Yeah,
Yeah.
exactly.
Got it.
But
Yeah.
anyways, it's just so basic. It's powerful, and we're able to collect all the information from our different groups, and then just dashboard them all. So we're watching. There's just certain metrics we know if it's red, yellow, or green, and we prefer green. So really, it's just it's QuickBooks. It's a lot of Kevin and Kurt interface. I mean, not extensive amounts. We are AI. My plug for AI is, oh my God, it's so powerful. But we're just figuring out how to make use of it, and carve some more time out for ourselves. But we're going to do it. So yeah, it's just a basic accounting system, dashboarding, and then it's good old fashioned talking to our people.
Got it. Any parts?
And I would
of
also add, we have a great or really good stable of advisors that we've asked to help Big Seven, and we'll use them to ad nauseum, where we'll have them do everything from, hey, come in, take a tour, tell us what you think. If they have industry knowledge to tell us, good, bad, indifferent, we'll have them. Maybe we'll bring them in, and they might help. Hey, I've got some people that might need that product.
Yeah.
Do you mind if I help you with sale? We're completely, hey, go knock yourself out. But I think it really helps from our standpoint, or at least from my standpoint, where you bring in someone who's been in let's say the steel industry as a whole, and they can walk a factory floor and immediately got it. I know what this does. I know what that does. And they get it. And they can tell you, okay, you might think about this or that in the future.
Makes sense.
A lot of help, a lot of outside help, which is one. And that, those are all those contacts are all forged through, relationships over the last 30 years. So you call people up, hey, I need a favor. Can you advise us on this deal? And 10 out of 10 times, they'll say, where do you need me? How long do you need me? I'm happy to do it for you.
Right.
Absolutely. Any parting words?
No.
Thank you for having us. This has been wonderful.
Yeah. Thanks, Maxim. Super great conversation. And, I hope, there's a resurgence. There is, onshoring and buy America. Damn it. That's what everybody needs to do.
I agree. I mean, I think that everything is moving from the macro to the micro, what is the personalization, what is micro manufacturing. And things have evolved significantly from 30, 40, 50 years ago.
Mm-hmm.
Are you noticing a similar movement in Canada in manufacturers?
For sure. I mean, like the benefit that we have is that our currency trades at a 35% discount to the American dollar. And obviously, the United States is our biggest trading partner. So by purely based on currency arbitrage, we have more manufacturing. We're seeing some of it where it makes sense. I mean, at one point I was a consultant with Nike, right? Like all of the hard goods were manufactured in America, all of the soft goods were manufactured overseas, or at least that's kind of used to be the case. So we're seeing some of this kind of like the hardest stuff gets done locally, or it requires a higher degree of precision, or maybe the transportation component, supply chain component, either for supply chain disruption or cost, is more local to the market, and then anything that could be mass produced is offshore somewhere else. So we're seeing continued drive for this. What we're seeing the Canadian government is, as well as the provincial governments trying to do, is like, how can we become additive in terms of our value chain? So if we're producing something, can we add another layer in terms of adding value to the product before selling it off wherever to whatever export market? So we're seeing a lot more push for that at both the provincial level as well as at the national level.
Hey Max, last question. Are you a hockey fan?
A little bit, not very much.
Okay.
Yeah.
Okay. I'm a secret Edmonton Oiler fan, so.
Oh, you are?
Just thought I'd ask, yeah.
Well, I can tell you that there's a massive rivalry. We call it the Battle of Alberta, where every year it's Edmonton Oilers versus Calgary Flames that they play. And even though we're 300 kilometers apart, it's not very far, like what is it, 150 miles, 200 miles? There's Edmonton and Calgary absolutely hit each other when it comes to hockey, because those are iconic teams. Edmonton is definitely doing a lot better than Calgary at the moment.
Yes.
But Edmonton had their down cycle as well, though.
Oh, for sure. Like it's like any team.
Yeah.
For sure. We still have not yet seen the resurgence in hockey in Calgary. We're building a new arena at the moment in Calgary, so maybe that gives a little bit more energy, because our arena is iconic. It's called the Saddle Dome. It looks like a horse saddle, but it's becoming dated and old, and it doesn't hold very many people. So we're going to a big arena, not very much bigger. It's only 30,000 people, but it's it allows for more participation. So we'll see kind of like if that provides a little bit of a boost in terms of how the team is doing.
Okay.
Very nice.
Go Flames. Well, I'll watch them with interest now.
Yeah, absolutely. Well, guys, it was an absolute pleasure having you on. Super excited. We'll produce the podcast within a couple of days and post it.
Okay. Well, thank you, Maxim.
Thanks, Maxim. Enjoyed it.